So I wanted to talk about this earnings trade that I did on Electronic Arts last week and how I saved it from becoming a big loser. So on Thursday, when Electronic Arts was trading at around 128, I sold a put spread like I normally do at a 123.118 strike. So right over here on this line, November 6th expiry, 123.118 vertical put, collected 84 cents. And then look what Electronic Arts did the next day. Remember, my short strike is 123. It dropped, here it says 115, but it actually dropped almost to 112 the next day, and then came back up again to 120, dropped again, 117, 115 again. But I think the low of the day was around 112 on that day. So what I ended up doing that day is I decided to sell the long put on its own. So I sold it for 60 cents and I decided to keep the short put and just roll it forward. So basically turn the put spread into a naked put strategy. So I took the 123 that I was short. I had to buy it back, of course. And I sold the 120 put for the following week. So I went from November 6th. So I went from 123 November 6th to the 120 strike of November 13. I did that for $1.20. I paid $1.20 to do that. So my goal when I did that is just to get out of the trade without losing money. So remember, I collected 84 cents to open the trade. I collected 60 cents when I sold the put option, the 118 strike on its own. So that puts me at about $1.44. And then I paid $1.20 to roll the 123 strike down to the 120 strike. So now that puts me at 24 cents. And that's why over here, I'm up 24 cents. You've got the 84 plus 0.6 minus 1.2. And today was the expiry. And as you could see, Electronic Arts ended up closing above 120, which was the short strike that I had. I could have let the trade expire worthless. Instead, I ended up closing the trade at around here. So you see around 11 o'clock, I ended up closing the trade for 24 cents. So basically, I paid what my net credit was going into the trade. So I closed the trade for break even, basically, if we don't include commissions, and I came out of it without losing any money. Yet, if I had closed it last week, would have lost about $200. In fact, last week, it dropped to 115. So it really depends. If I had taken action right away and closed it right away, I could have lost almost $400. But because it closed that day, I think at around it closed below 120. So I could have closed the put spread for around $3 and I collected 84 cents. So I would have lost about $250 if I had waited at the end of the day last Friday. But instead, by converting it to a naked put and rolling it forward and giving the trade more time, Electronic Arts ended up going back up. And I was able to come out of the trade without losing any money. I could have actually rolled it for a credit and I could continue in the trade for a credit, but I didn't want to hold a naked put for too long. So by doing that, it allowed me to have a good week this week, but it also allowed me to save last week. Last week I had a net profit of, here, let's add it up again. I had a net profit of $589, but it would have been a bigger loss if I had booked the loss on Electronic. All right, so if you have any questions, leave them in the comment section below. Like always, if you can open an account with Questrade to trade on the stock market, use my referral link below to get $50 in free trades. If you enjoyed this video, click the like button, share with a friend, and subscribe to the channel. Thanks for watching.